So I was going to talk about structures. Get to my notes. So in terms of the mechanics of a bank loan, it's very similar to, let's say, a home mortgage or a car loan, something like that, construction lending, if you've been involved in that, where we're taking a lien over the asset. The asset is the film itself, starting with the copyright and the distribution rights. And obviously we get an assignment of the revenues that are generated by sales of those distribution rights, whether it's an aggregation of territorial sales, or it's a single contract with a studio, or now more commonly a streamer, and also tax incentives. So, our loans 99% of the time are a combination of distribution rights and tax incentives. So it's great to know that Arizona has now sort of joined the club on that front. That's going to be a game changer, I'd imagine, over time, because that's the barrier to entry for a lot of production companies, whether it's independents or it's studios. The only places they're looking at making movies are places with tax incentives, because it's effectively free money. It's effectively, you're getting paid to go somewhere and make the movie. And the states and the countries that don't have those have either got to have something very special, or the actor or director must make the movie there for some reason. So that's really good. And and as Bill said, having film schools to sort of populate those those productions is also key, because that's what's going to qualify for the expenditures. If you're bringing people from out of state, that doesn't help you. So having the local crew is also going to be good. So we will generally, what we will do, the good news from the producer's point of view is we're not looking for a personal guarantee. So a lot of banks that I've sort of talked to who've been interested in getting into the industry, and we've sat down and had a conversation. At the end of the conversation, they'll say, well, so who's providing the personal guarantee? Because that's what banks look for, right? Well, there is no one. What are you talking about? We've got to have a personal guarantee. What happens if there's a problem? I say, well, if there's a problem, then we haven't done our job correctly. But there's no safety net. And in the odd instance where people have talked to, a bank has brought up a personal guarantee, and you look at a film producer's balance sheet or something, it's probably not worth much anyway. But so we really have to make sure that when we're underwriting these loans, that we get our arms around the value of the film. And obviously that's validated by those pre-sales, because the pre-sales are a commitment from a distributor to pay a fixed amount of money on an event that's going to happen, and that event is typically delivery of the movie. So we're looking at a film right now where it happens to be Sony is buying the domestic rights for a film. They're paying a $4 million minimum guarantee that's due on basically delivery and then complete delivery. And the difference between delivery and complete delivery is all the things that Sony needs to actually put the film out there in distribution. Complete delivery includes paper items like your electronic press kit and music licenses and things like that. And why that's important is because bond companies won't bond paper items. So if there's in this case, it's 10% of that payment is due on those final delivery items. I can't lend against that because it's not bonded. So, because if there's a problem with it, I've got nowhere to go. So, but that 90% of that $4 million is due on delivery of the film, the physical materials, or now it's on all digital, so it's not really a movie in a can anymore. But and then they've got 30 days to review it and then make the payment. So we're that's pretty straightforward for us to underwrite. But that, along with the tax credit, the key components of those two issues is timing. So we're going to sit down with the producer and we're going to look at those pieces of collateral and say, when is that likely to happen? So the distribution side is straightforward, because the bond company is going to bond according to the script, the schedule, and the budget. And then they will set a delivery date that everybody signs off on. And so we know that more or less around that delivery date, 10 months, 12 months, 14 months out, that payment from Sony is going to be payable. The X factor are the tax incentives, because the perfect example is the state of New York. State of New York, a lot of films getting made in New York. But now, if you make a film in New York in 2022, you're probably not going to see the certificate for the tax credit, and therefore the money coming from the state, until 2027. So what used to be 90 to 120 days, is now 5 years. So we're no longer lending against the state of New York tax credit, because 5 years to a bank is a lot can happen, especially in New York. So their loss is New Jersey's gain. So New Jersey came up with a program. They have a tax credit. It's a transferable credit, so it's a little bit different, but it's brand new. So at the moment, they're turning those things around in 90 days. So everybody who was doing New York, now go to New Jersey. So you have to be aware of that. We're going to be aware of it because we have to be, but as producers, you also have to be. I got people calling me up, oh, we're making this movie in New York. I'm like, wait, it's 5-year turnaround. They're like, what? I have never heard, this first time I'm hearing that. I'm like, yeah, we're not lending against it, and the people who are lending against it are going to charge you a lot of money, and it's going to be, the amount you're going to pay is going to destroy what you thought you're going to get out of the tax credit to carry that money for 5 years. So Louisiana is another one. Louisiana's always sort of been a little bit different, but now they're looking at somewhere around 2 years. So it's a little bit better, and we're still doing Louisiana. But obviously for one of the more, well-used tax credits, that's still a long time. And you've got to be thinking about the cost of that money over 2 years. So those kind of things figure into people's, decision-making when they're making the movie, both from, cost point of view, but also the things that can happen in that sort of time period. So those are the two components of the bank loan: is the distribution revenues and the tax incentives.